going into a Fed announcement today. Typically a very quiet day in yields, but it's taken for granted that they're going to cut by 25 basis points.
Yeah.
And it will be the rhetoric afterwards. I don't know, and maybe if we get time, we'll take a look at the Fed Watch tool to see if they've done anything with that DECE cut, because that was priced in with.
They have.
Yeah.
Yeah.
So, but we actually saw the BOE move this morning.
Yeah.
They cut by 25 basis points, and their statement came out afterwards. Inflation is above target, growth is above target. So the implication was their rate cut path, may be a little bit slower, or they may be a little bit more whatever verbiage they use.
Yeah.
And we saw sterling spike about 40, 45 pips on that announcement, sitting right up there near the highs.
Just really quick before we get into that, I didn't get it.
It's funny, when we both joined, one of the things that drove us nuts was the calendar functionality on the tastyfx platform, at that time IG. And we spent a lot of time and effort and finally have some calendar functionality that's really useful. It gives you can query it by country, by major minor event. You can also, and I think what's great is, when a UK rate hike comes up, it's hard. Nobody should be a compendium of where rates are in the UK, Europe, Japan, and stuff like that. But to get a sense of that, great snapshot here.
And by we made a huge effort, we mean neither of us. We just complained. We complained about it for 2 or 3 years, and then our buddy Shibashish and his team in both the UK and India, they knocked this out, and it looks great.
It was, and this was something that they had talked about endlessly. We tried a number of different solutions. Nothing was very good, and these guys finally, we've got a little bit of a new culture in our business, which is great. It's really a delivery-focused culture. That's why you continue to see improvements on the tastyfx platform. Where we are, like TradingView and other really exciting stuff that's coming very soon, and the ability to deliver on that quickly and really build out the best UX or experience.
It's a great team. We used to just complain, and no one would listen. Now we complain, and they
void. Yes. Well, it's a much better working environment.
Yeah, it's great.
Even our working environment's much better, much more efficient.
What?
People have ours is always this. Yours and mine personally.
How could I get better than perfect? We have a perfect working environment.
The 3 hours a day you're here, it is idyllic. The fringe, as we call it, the gray area, that's an interesting exercise.
So we got the 25 BIP cut. And my question was going to be, I didn't get a chance to look because I was making the coffee. I had to get coffee.
Again, you've got enough fluid there to carry you through several. Are you like phobic around dehydration or something?
Absolutely. How many of these do you think I drink every single day? This is 32 ounces.
In the 3 hours you're here, there's got to be at least 5 or 6 of those.
I try to put down 4 or 5 of them, which is
fluid.
Yeah.
Yeah.
The problem is that I'm constantly, in the 3 hours that I'm here, I'm spending 2 hours peeing. I can't.
You went right to the too much information page. Okay. But that's good. So you've got some caffeine. You're behind me.
But I didn't get a chance to see, did rates come off at all?
U.S. rates?
Yeah. From yesterday.
Bonds are lower again, so no.
Again?
Yeah.
Jeez.
Bonds are, they staged a very weak rally overnight. Again, we're at 115.5 in ZB, ZN 110. They staged a very weak rally, and this morning they came in and hit them with the statement out of the UK. They hit them again. Yeah. And it's almost like they're looking for any excuse to mark these bonds down lower.
Sure.
So it'll be interesting to see if, I think the thinking is the Fed's going to take the same thing. They're going to cut the perfunctory 25 basis points, but they may take, in their verbiage, take the impression more cuts off the table, which we're seeing a real, remember, we lived with 3 years of yield curve inversion where our 2-year yields were actually higher than our 10 or 30-year yields, which is a normal yield curve is
upward.
The longer the duration, the more, because you're exposed for a longer period of time to possibly inflation, other than you command a higher yield. We saw just the opposite of that. That's unwinding now, and the 210s is out to levels we haven't seen since it went inverted. So it is continuing to steepen, that long end getting more expensive relative to the short end.
It's steepening.
It's steepening.
More. Okay.
Was that a long-winded?
No. It's a helpful explanation. And 10-year rates now with that information. Yesterday they were teetering around 4.5%, and now I'm imagining that
they're right there. They got down to like 442, 440, and at noon we had a 30-year auction that this is way too macro. I feel like that didn't go off very well, which meant that it tailed through by 2 basis points, which means they had to, again, when the government auctions paper, it's not like, hey, everybody buy it at this price. They have to hit, everyone submits a bid, and they have to find bids to fill the order, so to speak. And they had to go down 2 full basis points to find the bids, which means that the demand wasn't great for this auction in this environment.
Rates needed,
Higher rates needed. So that kind of, because we saw bonds kind of stage a rally after the fall, post-election, that kind of took some wind out of it, and it seems like there's more wind to be taken out. I don't know where all this stuff is going.
So I asked that question because today is absolutely putting together a little bit of a puzzle, because you have the BOE rate cut, 25 basis points. They're still at 5%. And remember, the UK was the closest to the US of the major economies in terms of hiking rates. U.S. got to 5.5%. UK got to, I think, 5.25%. Yeah, I have it right in front of me, 5.25%. Whereas the ECB, the Australian central banks, other major Canadian central banks only got to like the 4 handle, mid 4s. And so UK has been one of the strongest. Let's check out the U.S. here. We have cut from that 5% down to, or 5.5%, sorry, down to 5, and they're looking at another 25 bip cut here. It's pretty much all priced in. We can look at the FedWatch tool if we want. It's going to show 100%, maybe minus 1 or 2 percentage points, rounding error off of the 25 bip cut today. And you can see here in the economic calendar, the forecast is 4.75 versus 5% current. Really interesting. And I asked you about the yield piece because U.S. yields yesterday were ripping, and today they're higher again. But the U.S. dollar is starting to give back some ground here. You have to keep all these things in mind that, yes, yesterday the U.S. dollar had a huge, 200 points against the euro, at certain points more than that. I think 100 points against the pound. Huge moves against the yen, especially late in the day. It started to kick the yen's butt. Some huge moves yesterday, now giving back some ground. And you might say, oh, well, how can U.S. rates be continuing higher and this U.S. dollar now be giving back some ground? Well, keep in mind that global rates are also moving. And even with this cut from the BOE, and you say they come out hawkish that, we're cutting now, we might not cut so much in the future. I would imagine that UK debt markets are showing higher interest rates.
Absolutely.
Yeah.
And it's a good point. So this is part of the equation that drives FX. You don't have to drill down and be an expert. Again, to trade FX, you don't have to track everybody's rates. Actually, we're going to walk through in the next, I'm going to do a segment with Glenn and for the next couple of weeks talking about how do we see that difference in rates. And it's actually through the swap rate.
Yeah.
And it's kind of a unique feature that gives you the insight you want. Which country's interest rates are above the others? It's depending on that interest rate differential. You either pay or get paid to hold that position.
It's kind of like positive and negative theta in a way.
Absolutely. Yeah. That's a great analogy to it. And we're going to walk through it because it's a unique piece of product construction, and it is a part of Spot FX that drives a certain group of traders' behavior. And I think yesterday we would call it was a dollar move. Whether it was the euro down 250 at one point or Aussie down 80 at one point or 100.
Well, the pound here going from 130.40 all the way down to, at its lows, 128.40. So a high to low move of 200 points.
Right. A big move in sterling too. All dollar based. What we're seeing today is a little bit of, now it's becoming a little bit more currency specific. Mm-hmm. So euro, yes, off its lows, not by much. Sterling, much more so. Aussie, back to levels we haven't, we're back to...
yeah, wow. They put it all back in.
All back in.
Wow.
We're now right back to the 200. This is exactly the 200-day moving average, right to where we kind of came off from. And again, I probably mention that too often, but it's an old school FX indicator, 200-day moving averages. I look at it, it's just from my institutional background, it was the guys who taught me and the guys who taught them always looked at that, so it became a self-fulfilling prophecy a little bit.
Cool.
You look at it, you dispense it, and put that into component. But this was one we talked about yesterday a little bit. Why isn't the Aussie down more? You would think if the dollar's so strong and China's going to get impacted with tariffs, China and Aussie having a strong correlation, why didn't they hit the Aussie? You can come up with lots of reasons. Well, is it The gold piece, which also got slammed incredibly hard yesterday. Gold piece coming back a little bit, but we're still $80 off our highs in gold.
Can't be. Yeah.
It's the risk on piece. So attaching one piece of context, that's what we don't do. You take the tape here, the fact they couldn't beat it up as hard, and we're also at the lower end, 65 cents is cheap Australian dollar. So the fact they couldn't do much more damage to it and get it down below those lows, kind of put the shorts to the challenge a little bit. So we have very different view here in Aussie. We are back from where we were versus going to the euro, where are we back a little bit? Yeah, we're a little bit off the lows, but we're basically back to where they finally started to find a little bit of two-way action. So you look at that cross, and we'll see a pretty dramatic move with that Aussie outperformance. Is that becoming a little bit of a risk-on trade? I don't know. Maybe I'm less inclined to want to attach. Well, the reason why Aussie's doing so much better than Euro is this. You kind of trap yourself in a box. You keep those things in the background. But when you look at it, as yesterday, and we talked a little bit about this with Glenn, is that the fact they can't get this to trade lower makes me think that maybe a lot of people argue, well, it should catch up. I want to sell Aussie and I want to buy Euro because they should be relatively the same.
Everything should be unchanged all the time.
Right. Yeah. Or they should all be relatively down the same. Yeah. But it's not always a dollar play. What that told me was that Aussie actually continues to exhibit a little bit of strength, and we're seeing that play through right now. So trying to play catch up on these divergent moves by buying the weak one and selling the strong one doesn't necessarily always work for you on a post-binary event. Well, so I think you need to be mindful that the temptation here, Euro's going to be back to unchanged in the next 2 days. I don't think we play the game that way.
Well, and you and I will look at a lot of like underperformance, outperformance, but usually over like weeks or months,
right,
as kind of like a longer term trade. But when you have a big event like an election or like today's FOMC, that we'll look at in just a second, because there's another huge event here this week. You have to default to whatever your day trading or short-term strategy is. And for us, I mean, this is just an example. You do you. But for us, it's usually looking at, okay, what's the normal move? What's the standard deviation on this market? When it gets outside of that, okay, it's maybe interesting.
Right.
That's a big move. If I'm a trend follower, maybe I go with it. Us, for example, tend to be contrarians, and so might go against it. And we talked about it on Tuesday. One of the worst things you can do is just pile into one idea, one market.
Right.
One of the best things that you can do with whatever your strategy is diversify across as many markets as possible and trade small, especially with such a big event. Because, this would have been and still is a nearly impossible market to have made money in as a contrarian off of this election. Because especially, I can see back to my days at the Board of Trade, Pete, and on a big day like this, now we were trading the Treasury spreads.
Right.
But you see this move here, and it gets to, okay, it's outside the one standard deviation. This euro went from 109.20 to 108.40. That's right there at the one standard outside the one standard deviation move. And it's starting to kind of sit there. That's probably where I would have gotten long.
Right.
And then you would have had this move, and then the risk manager would have been tapping me on the shoulder saying, hey, you should have been out 50 pips ago.
Right.
How do I get out of this? But if you were able to say, okay, I've got $100 and I'll put $30 long here, and I'll put $30 long in this sterling market, wherever sterling's back to a scratch if you got long at the same point, and I'll put $30 here in this Aussie market. Now this is a profitable trade.
Right.
You never know what it's going to be.
Right.
And the worst thing you can do is say, oh, no, I know it's going to be this euro that's going to come back. Or same thing with the trend following front. If you just shorted this Aussie because you're saying to yourself, hey, this one hasn't run as much as the euro, this is the one I need to short, you'd be kicking yourself today saying, how can this US dollar be so strong and I'm short just the one that is not giving it up?
Right. And I think that's a great piece to, there's correlations between all these products. You picked out three that actually, Euro Sterling has a closer correlation. Euro Aussie doesn't. It's more elastic. There's different drivers. So when you're diversifying, they're all traded against the dollar, but by doing that, you're actually, and this is a great example of why you look at diversifying through a series of pairs. In general, is diversification outside your core.
Super different than one of the least correlated to equities one way or the other.
Right. So having that is an important piece. Looking within this of finding opportunity is great. And one of the things I love is that we talked about Euro Aussie. Now, if you wanted to play the catch-up game, which I think we're, again, on events like this, I'm very loathsome to do that. But what this is showing you is that, if you wanted to, you don't have to go buy Euro and sell Aussie. You could trade it as a single entity with tastyfx, which is great. So unlike futures and some other spots, ETFs, it's almost impossible to recreate any of this. Futures is a little bit more challenging. Building something like this out in futures is very tough. So big move in the cross? Absolutely. Interesting spot. And when you look at this and you think about that cross, if you were to look at this, you would say, maybe I'm not going to be buying euros yet, with the idea of selling Aussie.
Well, and like we talked about, your medium to long-term strategy is usually different than your day trading strategy. Again, and whatever yours, again, these are just examples of what Pete and I tend to look at. But yeah, this is becoming interesting. Now we're looking at the Euro Aussie cross, which isn't necessarily, again, a market that yesterday I would have been like, oh, I'm piling into this for my day trading. But it is getting to a bigger extreme, and it's one that I would maybe attribute more time to. And say, okay, well, it's gone from 165 to 162, so a 300 pip move, which is the extreme of the last couple of days here. And if it gets down below 162 or 161, from a contrarian perspective, maybe it's interesting. Right around here, if you're a trend follower, maybe it is interesting for it to go down to the lows. But another interesting piece that I want to hit on really quickly, because we talked about it just a little bit before the event, these crosses were better for back and forth. Not Euro Aussie, again, that's not a cross we tend to look at.
There's not a correlation.
Aussie Canada, Euro Sterling, those are crosses that we tend to look at because the correlation is higher. If I get back to the 15-minute chart here, you can see a bunch of back and forth here the last week. And now, obviously, Aussie is outperforming Canada and outperforming a lot of currencies as the week develops. But another interesting piece that you didn't have to pile in one way or the other with U.S. dollar alone. If you looked at, we tend to, in big events like this, and you might say, well, Frank and Pete, what markets are you, if you don't look at Euro Aussie, what markets do you look at? The U.S. dollar markets tend to be some of the most liquid and pose some of the best opportunity because of that liquidity, especially around a U.S. election. And in terms of those cross pairs, we tend to look at the ones that are correlated to each other because, again, they tend to have some of the best liquidity and everything else, and that's Aussie Canada and Euro Sterling.
Absolutely. So a great walkthrough, interesting stuff to see unfold. We've got a whole other set of, again, the rate announcement at 1 o'clock today, press conference at 1:30, so we actually get a double dip on binary events, which is great. So the rate release will come with a statement that'll be parsed. We'll see a reaction. Then Jerome Powell will speak. We'll see another reaction. And then tomorrow we've got Canadian unemployment. So this is going to be a chock-a-block week. You like that?
I don't know what it means. I've heard someone say it on a movie like Sherlock or something.
Yeah. So it's going to be a good week. We'll see you back here tomorrow. Have a great day.